But, PI Industries is the one that we're looking at. The company actually did not speak to us post their earnings, and it was a very strong performance this quarter, better than its peers. Revenues and profits witnessed a healthy growth. Exports have also witnessed a strong 33% growth. So we thought we'd invite the management to tell us a little more about the way forward. Mayank Singhal, the Vice Chairman and Managing Director at the company, joins in. But he's on the phone line with us. So Mayank, appreciate your time. Thanks a lot for joining in. I want to ask you a little bit about the domestic growth first before I head to exports, because there is a little bit of a problem there. Your revenues have fallen about 13%, and 20% of your business comes from the domestic market. So tell us a little bit about the pressure points here, and do you foresee more weakness?
Yeah, hi, morning everyone. So as you see, the company's overall grown 24% revenue for the first quarter. The domestic business has witnessed about a 13% degrowth. While I would say that the initial season delays and erratic rains have been the key driver, but we do assume to say that this catch-up can happen well in the second quarter. But on the other hand, the positive side is there has been a very high efficiency in the working capital, and PI as a strategy has taken not to really stock up the channels, but to more look at sales in the ground and accordingly optimize in the first quarter. So going forward, I believe that we should be in a better situation coming in the second quarter, and I think the sales would come in line to our expectations.
So when you say a better situation and come in line with your expectations, what are you talking about in terms of growth in the domestic business? Will it be a single-digit growth? Are you looking to get back to double-digit within this fiscal itself?
Yes, within this fiscal, we should definitely target a double-digit growth here.
Okay. Is there any, I mean, if the situation does not improve, Mayank, good morning.
Good morning.
Is there a possibility that at some point you've held on to what you said you will do for the year, but is there a possibility of you lowering, some of those estimates? I mean, your internal targets?
Well,
the way
I
things
would
are
say
looking.
that we're pretty much optimistic about looking at the way we see the order book position, the CSM, and the way we see the domestic business, as we have given an outlook of 18 to 20%, we would still hold on to that, yeah.
Okay. All right. So no real downside or anything of that sort out there. Could you tell us how much is pyroxasulfone as a percentage of sales? Sorry, that's a tongue twister for me. It's a product which has done well for this quarter. And what was the growth that you saw?
Well, I don't have the exact number for the product growth, but, the sales are quarter to quarter is different from a product mix and demand cycle. So you could have a higher percentage of one product in one quarter and the other in the other quarter, and these are seasonal, as you know. So I don't have that in my hand right now, but yes, that there could be a higher proportion of that in this quarter.
All right. Hi, Mr. Singhal, and good to speak to you after a while. Nigel on this side. Well, 18 to 20% growth is what you're guiding for, but you've also indicated there is some pricing pressure. So what should margins look like?
Well, again, on the margins, we have looked at the pricing pressures, and we are looking at the targets that we have given. Obviously, we'll also be working aggressively on the cost fronts, which we are driving through. So we're pretty confident in maintaining the margins, as we mentioned, to where we are.
Around, so mid-20s?
Yes.
Okay. So overall, on the top line, you're saying it'll be an 18 to 20% growth. The domestic business, you're looking to get back to double digits in FY24. But for the export business, can you just give us a little more color on what the growth could look like over the next couple of years, and what could be the levers of growth?
Well, as we have a strong order book position in that business, we have certain new products which are getting commercialized, and we have given a guidance about the same level of 18 to 20% growth average for the next 2 to 3 years, and that's what we continue to maintain. Yeah.
And on the pharma business, there is an EBIT loss that you reported. What is the outlook? By when do you think the pharma business will start to see profits?
As you know, this was the first quarter, and this is the first quarter revenues and IND-AS 118 accounting issues. So looking at that, we look at getting the revenue, as you given a target of 500 to 550 crores at the year end, and that's where we are on target to that.
All right. Mr. Singhal, you had raised some money via the QIP route a couple of years ago, and then every time you've joined us and on various con calls, people have been asking, what are you going to do with this money? Now, you've done these couple of acquisitions, but you still have some money in the kitty. Are there more acquisitions on the anvil?
Sure, we're looking and evaluating various opportunities, but obviously they have to be in alignment and sync with our numbers and strategies that we have in place. So we are definitely looking at those opportunities in time.
And that would be in the pharma space itself?
No, we're looking at all the other business areas too. It's just not only in the pharma space. And also, as you would see, we have a capex outline. So, the QIP money was raised both for the purpose of capex and M&As. Yeah.
Okay. So, just to get back to the numbers, you said that you plan to double pharma revenues in the next 3 to 4 years. That is on track?
As you know, we just initiated. Yes, that's the initiative strategic plan. We are working towards that. And obviously, that's the idea there.
So what should the absolute number look like on pharma?
Well, I said the year-end number would be around 500 odd crores.
Okay, so 1,000 crores in 3 to 4 years.
Okay,
As you know, we're in the building phase to differentiate ourselves in that space. So the initial phase is build out, and then obviously the revenues pick up. Yeah.
Sure. So 500 crores is what you're looking at by the end of the year, and perhaps doubling that. And in the margins, I mean, will it continue to be around 14-15%, or because you are in this building phase, would you have to take some hit on the pharma margins?
I would say the margins would be at the 14-15% in the first couple of years. We obviously, the intention and idea is to improve that with the strategies. As you rightly mentioned, in the beginning, we are making the investments, building the right teams so that we can have the scale up.
Are there any products going off patent globally which PI Industries can look at or even manufacture?
In the pharma space?
Yes.
Yeah, but in the pharma space, our objective is more in the CRO and the CDMO play, where we are working with innovators again and to create different jobs. So it's not really driven by the generic approach here.
Okay.
Mayank, just to get back to that one sort of molecule which has done very well for you, you said you don't have the exact numbers, but do you have a sense of whether we will see a repeat of that? Because you said it's done very well for you in the quarter gone by. Will it be maintained at that level? Because some analysts that we were speaking with were saying, well, that is unlikely because other alternatives to that, which are manufactured by China, etc., which had gone up in prices because of supply disruptions, etc., those things have kind of normalized now, and prices have come off for those things. So just wanted your input there.
No, that has been all. The numbers that we're planning has all been balanced with all those inputs with the global innovator and partners. To that extent, I can answer. Yeah.
Okay, so all of that included, 18 to 20% revenue growth is what you're expecting. Mayank, good to speak with you. Thank you very much for your time. Appreciate it very much here on CNBC TV 18. That's PI Industries with that insight. Well, 65 points.